The economy is about to throw a lot of people into shock. Hey, everybody, you're watching Bull Boom Bear Bust. My name is JJ, back here with another dose of economic reality. We've got a lot of news to get into today. We want to get caught up on the economic situation. And as always, we have to talk about housing. Let's go ahead and start right here. Recent article out of Fox 8. Insurance crisis leads some to default on home loans or make payments late. Well, that sounds pretty dramatic. Why are they calling this an insurance crisis? Well, what's happening for many homeowners in certain areas is they're seeing the portion of their mortgage payment that is insurance and taxes eclipse the principal and interest of their mortgage. Insane, right? Let's take a look at this article here. Let's get into this real quick here. Quote, we're seeing people have their principal and interest, which is the largest part of your mortgage, be eclipsed by taxes and the insurance portion. So basically, it's double. That's dramatic. That's a dramatic increase in your monthly payment, and it's leading to foreclosures. This is down in Louisiana. Quote, they're losing their houses every month because we've had to raise the rates for citizens, talking about the insurance companies. 120,000 policies. Since January 1st, that's 10,000 a month that are renewing at a higher rate. So basically, when your insurance company raises your rate, you're very likely to see your mortgage payment goes up. If you're one of the homeowners that has your um, insurance and your taxes rolled in to your mortgage payment, this is going to be a dramatic shock for a lot of homeowners. Now, right now, we're seeing a lot of homeowners sit and not put their home on the market, even though they want to sell. A lot of them are kind of afraid to sell because the high rates means they'll sell and have to get a super high rate on their next mortgage, right? So a lot of people aren't in a position to sell and have enough equity to go out and buy a home because many people bought a home in the past few years after home prices had surged about 40% just in the past 3 years on average when you look throughout the United States. So a lot of people, yes, they have some equity, but not enough to go sell a home and then pay cash somewhere else. So typically they're going to have to get another mortgage. And what does that mean? That means going from a low mortgage rate, 2.5, 3% to 7, maybe even 8%. So inventory is really low right now, but pretty soon things like this from this article, these taxes, insurance, HOA fees are getting crazy as well. This is going to force people to have to sell. Now you may say, well, can't they just go rent somewhere? Sure, they could, but rents are still pretty high. Now things are changing though. We're seeing rents start to drop. But let's take a look at a recent post here from Graham Stephan, a big YouTuber. He posted this over on X. If you were to buy $1 million home, sorry, let me bring it up here. If you were to buy $1 million home, you'd have to put $200,000 down, take out a mortgage of $5,600, pay another $1,000 in property taxes, insurance, and maintenance, or a grand total of $6,600 a month, or you could just rent an identical house for $3,900. And you see the cost to buy ratio here versus cost to rent. And people are going to have to make this decision. Now, it is a little bit cheaper to rent, even though rents are pretty high, but it's going to be more of an incentive to rent as rents continue to drop. And we are seeing rents drop. We're seeing home prices drop a bit too. So you can see the chart here. The blue line is the cost to buy, the cost of rents in the red line. And if we're allowed to see any sort of free market, any resemblance of a free market, then you're going to see both of these lines come down. The cost of buy has got to come down a lot. The cost of rent has got to come down a lot as well. The worst thing that could happen is going to be a ton of intervention where, just like we saw in 2020, where they put a freeze on foreclosures and a freeze on evictions. And yes, those things are bad. We don't want to see those things happen, but they have to happen for prices to come back to any sort of sanity. Right now, prices are insane for rents. They're insane for homes. And that's why we see people basically going broke. When you look at the savings rate, it gets lower and lower each month. And the U.S. consumers backed into a corner right now. People are raiding their 401ks. They're running up credit card debt like we've never seen before just to make ends meet, just to get by. So this game has a ending. There is a fourth quarter, and there's going to be a final buzzer to end this game. But what is the response going to be? Is it going to be a bunch of programs like we saw in 2020 that's going to keep prices inflated and prevent natural market forces from occurring? Or will there be massive deflation, right? So without the intervention, we would see massive deflation. And even if you look back at 2020, I think we would have witnessed probably even 50, 60, 70% drop in home prices. Rents would have probably dropped in half if free markets were allowed to function, if they didn't have all these rescue programs that a lot of people had to depend on. And I'm not criticizing anyone for using those. I would too. But when you look at it, what they've done is they've prolonged the inevitable. Most people, including myself, if you had to choose between feeling pain now or later, you would choose later. Of course, most people would. Same thing with financial strife. If you had to choose between going broke now and later, many people would probably choose later and just enjoy life, that you can while it lasts, and not have to deal with that pain right away. And then if you delay it, then maybe you can find a way out of it. I think that's the way most people look at it. And let's talk about how the economy really is versus how it's being portrayed in the media. And there's a recent article here, I believe this is out of the journal here, Why Americans Feel Gloomy About the Economy Despite Falling Inflation and Low Unemployment. There's a real article with this headline. Can you believe it? Well, it's obvious. It's obvious because the headline numbers are nonsense. Just look at the unemployment rate. It's a lot higher than what's being reported. Look at inflation. It's a lot higher than what's being reported. We've talked here many, many times about how those data points don't include all the things that people have to buy just to get by. So, of course, when you look at Americans and their sentiment, it is very gloomy, despite these, false reported numbers here, inflation and unemployment. We've got 100 million people out of the U.S. labor force right now. In fact, let's go over to a chart here and see if we can get an update on that. And I'll go ahead and make myself small down here so you can see this chart a little bit better here. And let's go ahead and scroll down. This is the number of people not in the labor force. Now, this chart's in thousands of people. So when you look at this is actually 99 million people, almost 100 million people out of the labor force. And look, we haven't recovered from the spike that we saw in 2020. If you look at the chart right now, you'll see we're at about 95 million going into 2020, spiked up to 103 million, and it settled back down a little bit, but we haven't recovered back where we were before the health crisis. In other words, a lot of people left the labor force and haven't come back, but yet that's not being reflected in the unemployment number, because once you're out of the labor force for so long, you're no longer considered unemployed, even though you're actually not working. A lot of these people got some sort of other help to help them stay out of the labor force. Other people just move back in with mom and dad and just are making ends meet that way. And when you look at the younger generation here, the millennials and so forth, you see stats where in some areas close to 50% of people are living at home with their parents. Also, over the past few years, we saw a record number of people go out and buy second homes, vacation homes. I think you're going to see a lot of those people put their home on the market in the very near future. Also, millions of Airbnb homes popped up where people wanted to buy them as an investment and take advantage of the quote unquote booming economy. Well, now as the boom turns to bust, a lot of these people are going to be forced to put their home on the market. Add those sellers to all the sellers that are in financial tough situations because of the taxes, insurance, HOA fees, all the other cost of living things they have to account for. And look out, folks, you could see a big tsunami of supply coming onto the market, or a lot of homes listed. And that could really help shift this market into, instead of a seller's market, into a buyer's market. Folks, the bottom line is that we're being misled on an epic scale. But if you're in the right position, if you're ready for it, you'll know what to do. And I think that's going to be a lot of us here on this channel. We're going to be ready for this. Inflation, deflation doesn't matter because we know what is coming. That's why you're going to have some cash available, waiting for a crash, waiting for deflation. But if this market's propped up, if there's rescue programs, if they put a freeze on all the foreclosures and evictions, we're going to see prices shoot upward. So invest accordingly. You can even invest in housing in an ETF. You don't even have to own a home. I encourage people to own homes, property, land, real estate, etc. But you always have to look out for the things we talked about earlier, the cost of owning. So position yourself well. Also be ready for an emergency. This whole thing could come crashing down any moment once something breaks. Otherwise, um, I don't think anyone knows the exact direction. I know billionaires. I've seen billionaires predicting a crash for years, and you would think that billionaires would know exactly what's going to happen because they're billionaires. They're smart, right? Maybe they inherited it. Maybe they're just lucky. Anyways, nobody really knows exactly what's going on. So we're going to keep on top of everything we can here for you, the most important news. Please give us a like, subscribe if you like what we talk about. Help keep this channel alive. We appreciate it. And thank you so much for watching this report. And I hope to see you back on the next report, which probably will come out tomorrow. Thanks everybody for being here. Keep stacking. Till next time. Bye bye.